$14.2 billion to buy back a factory you already built. You have to admit that is an epic flex from Intel.
Epic flex? Nate, it's a cleanup operation. They're just buying out the 49% of the island fab they dumped when they needed cash.
Hey, regaining full control of your own manufacturing hub sends a huge signal. Mega deals are back.
Only in the headlines. 95% of actual deal volume is still under $1 billion. But fine, let's look at the Intel math first. The rundown.
So everyone is staring at these massive headlines, but if you look at the actual volume, 95% of market activity right now is happening under $1 billion.
Which is exactly where the real strategy happens. Look at creative planning. They just bought London-based Maseco LLP. They added over $5 billion in assets under management in one swing.
Wealth management roll-ups are the undefeated champions of the middle market. It's basically a guaranteed annuity stream.
Speaking of middle market bets, Cyclerion and Korsana Biosciences are doing a $380 million all-stock merger.
Alzheimer's drug, right?
Yep, all stock.
Because nobody wants to put cash into a phase 2 neurology trial. It's a shared lottery ticket. If the drug works, they both get rich. If it fails, well, at least they didn't burn their cash reserves to buy it.
Keep an eye on their early regulatory filings tomorrow. I want to see the actual lockup terms on that stock swap. Also, on the watch list for tomorrow, the Amphenol open offer for ADC India Communications finally starts its tendering period.
Took long enough. Wait, did you see the Gilead news? They're extending the expiration date on their tender offer for ArcLX. Just classic timeline friction.
Always happens when you try to rush a biotech integration. But wait, I have to ask you about the gossip. Estee Lauder and Puig.
Oh, I love this. A predominantly stock-based combination. It would totally reshape the cosmetics industry. Imagine that brand portfolio.
I'm going to stop you right there. It's a total vanity project. Stock-based cosmetic mega mergers are just what happens when two legacy companies realize their organic growth is flatlining.
Oh, come on. Puig brings the edgy prestige fragrances. Estee brings the massive global distribution. It's a perfect puzzle fit.
It's two dinosaurs tying their tails together so they look bigger to L'Oreal. Have you looked at Estee's recent margins?
Spoken like someone who only buys drugstore moisturizer.
I buy what works, Nate. The data doesn't lie. If you want a real deal, look at KKR launching a tender offer to take Taiyo Holdings private, or Lupin grabbing VISUfarma from GHO Capital. Clean, strategic, no vanity.
Fair enough. But speaking of massive cash moves, we cannot ignore the giant elephant in the semiconductor room.
$14.2 billion to buy back a factory you already built.
Intel is basically paying a premium to undo its own joint venture in Ireland. Plus, we have QXO dropping $2.25 billion on Kodiak Building Partners. The mega deals are officially back, and we need to look at this Intel math. The big one. $14.2 billion to buy back half of a factory you already built. You can't make this stuff up.
It's the ultimate corporate walk of shame. Intel is paying a massive premium to reclaim that 49% stake in their Island Fab joint venture. They sold it to raise cash, and now they're buying it back because they realize they actually need it.
I actually respect the move. Sometimes you just have to admit your financing strategy was too cute and fix it. They need full control of that manufacturing hub. You can't be the world's leading foundry if you have a financial sponsor acting as a roommate in your most advanced European facility.
A roommate they explicitly invited in to pay the rent. My issue is the capital allocation. Intel is in the middle of a massive, painful turnaround. They're cutting jobs. They're bleeding cash in the foundry business. Is dropping $14.2 billion to buy out a JV partner really the best use of liquidity right now?
Yes, it is. Because the alternative is having a partner who eventually wants an exit, dictating terms on a critical piece of infrastructure. It's like trying to renovate a house while your ex still owns half the kitchen.
That analogy is a stretch, even for you. I just look at the footnotes. The financing for this buyback is going to hurt them. They're essentially taking on more expensive debt to replace cheap equity they gave away too early.
Maybe, but look at the broader picture. We're seeing major capital deployments everywhere. QXO just finalized their Kodiak Building Partners deal for $2.25 billion. Building supplies isn't exactly sexy, but $2 billion says industrials are heating up.
True, but I have a bone to pick with this whole mega deal narrative everybody is pushing today.
Oh, here we go. How can you argue with the tape? We just talked about over $16 billion in 2 deals.
Because it's a statistical mirage. I was looking at the market analyst notes this morning. Mega deals are grabbing all the headlines and propping up the total dollar values, sure. But smaller transactions, the ones under $1 billion, are actually driving 95% of current market activity. 95%, Nate.
Right, but nobody writes voices. So the consensus out there this week is basically a tale of 2 markets. Analysts are pointing out that tech, healthcare, and finance are pulling the entire North American recovery forward.
Which is technically true.
But then they throw in this stat that I know you are going to hate. They are saying mega deals are just grabbing the headlines, and sub-billion-dollar transactions are driving 95% of actual market activity right now.
I do not hate the stat, Nate. I hate the framing. Volume is not impact. Yes, 95% of transactions are under $1 billion. But look at Intel dropping $14.2 billion to buy back that 49% stake in their Ireland fab. That single move shifts the entire semiconductor supply chain.
Okay, sure, but look at QXO finalizing Kodiak for $2.25 billion. The mid-market is where the actual strategic repositioning is happening. The Intel deal is just them fixing a past structural mistake.
Buying back your own manufacturing hub at a massive premium is definitely a choice.
Speaking of premium choices, did you see the gossip leaking out about Estee Lauder and Puig?
The cosmetics merger.
Massive, predominantly stock-based combination. I can already smell the synergy pitch decks from here. Some banker is absolutely going to claim they are reinventing lipstick.
Oh, come on. A stock-for-stock beauty merger in this consumer environment? Show me the exchange ratio and I will show you who is actually desperate. I am way more interested in Gilead being forced to extend the expiration date on their RCLX tender offer. Timeline friction is almost always a red flag.
You always look for the dark cloud. I am looking at healthcare and seeing Cyclerion and Korsana doing a $380 million all-stock merger for a new Alzheimer's drug. The innovation engine is clearly running.
Pure froth until I see the clinical data and the actual merger agreement.
Well, we might see exactly how frothy it is sooner than you think.
Are the early regulatory filings dropping?
First thing tomorrow morning. And while you are refreshing the SEC database for Alzheimer's drug specs, I will be tracking the Amphenol open offer for ADC India as the tendering period officially begins. Spill the tea. Okay, but tell me you saw the Puig and Estee Lauder whispers.
I saw them, and I immediately looked for the catch.
The catch is that it would completely reshape the cosmetics industry. 2 massive beauty giants combining, it's the ultimate glow-up.
Please never say glow up again.
I used it perfectly.
You sounded like a managing director trying to relate to the summer analysts. But look at the rumor details, predominantly stock-based.
Right, conserving cash makes sense in this rate environment.
Sure, but Estee Lauder stock has been brutalized lately. If I'm Puig, fresh off an IPO, am I really trading my shiny new equity for Estee paper? The valuation math there sounds like an absolute nightmare to negotiate.
You're underestimating the ego play? This is legacy beauty meeting the cool new kids. The bankers are going to pitch this as a transformative mega deal.
Bankers pitch everything as a transformative mega deal. But the reality is, mega deals are just a distraction right now.
Oh, come on, we're seeing massive transactions?
We're seeing headlines. The actual data shows that 95% of current market activity is deals under $1 billion. The middle market is carrying the entire industry on its back, while the giants just flirt in the press.
Flirting in the press is my favorite kind of M&A. Speaking of struggling to close, Gilead is getting left on red.
The RCLX tender offer.
Exactly, they just had to extend the expiration date. Again, timeline friction is such a polite corporate way of saying nobody wants to tender their shares yet.
It's fascinating to watch. Gilead has the cash, but the market is clearly holding out for a sweetener. We'll see if they blink.
We might not have to wait long for someone else to blink. Speaking of massive cash piles and zero patience, Intel just dropped $14.2 billion to buy back a giant mistake.
Reclaiming their island fab. We definitely need to tear apart the numbers on that one. Tomorrow's radar.
I'm setting an alert for that Cyclerion and Korsana regulatory filing tomorrow morning. $380 million for an Alzheimer's play is a massive bet.
Massive bet, tiny deal. Everyone obsesses over the mega mergers, but 95% of actual market volume right now is under $1 billion. That's where the real mechanics are.
Oh please, you can't tell me you're more excited about Amphenol's tender offer for ADC India kicking off tomorrow than the Estee Lauder and Puig gossip.
Amphenol actually has a tendering period starting. Estee Lauder is just whispers.
Whispers of a giant stock-based combination. The beauty industry is about to get a total facelift, and you want to read telecom supply filings.
I absolutely want to read the supply filings. The beauty deal is mostly paper anyway. Speaking of paper, Gilead is hitting a wall with Arcellx. They just had to extend their tender offer expiration.
Timeline friction strikes again. We'll see if they actually get it done next week.